All right, so we've got about 16 people that have joined. Everyone's obviously can hear us. Marcus should be able to turn on his camera as well. So yeah, so welcome everyone to the webinar today. So this is a really special webinar, and it's just for the people that have really had the good luck to see the post that Giovanni did in the Discord group. It's actually just something that we decided to do a few days ago. We wanted to, well, we've been working together pretty much since the Bitcoin conference last year, Giovanni.
Mhm.
Yeah. And it's taken a long time for us to get to where we are. We kind of make a joke amongst us. When we first met Giovanni and we started working together, I say that, yeah, thank God he ended up liking our system, because if he didn't, he would have told every single person on X every single day how bad
How
it was, and
crappy
we
it
wouldn't
was,
even,
and they were
we,
right. They were right. This is what I will have done.
we wouldn't have heard the end of it. So he's been,
You know what is happening right now? I get bombarded by meme coins. People will want me to support
yeah.
meme coins, and they're almost thinking to do like a crazy thing where I say, yeah, yeah, give me a bunch of money, I will, and then I make a post and say, all these shit coins try to bribe me, and I rag pull the rag pullers, you know.
Rug pullers. Yeah, that's good. Um, yeah, so we wanted to do a bit of a chat because Giovanni's been very what's the right word, protective of his followers and his community for all the right reasons. Because crypto is famous for people getting scammed, or people getting losing money, people giving bad advice. I think Giovanni has some of or has probably the best understanding of Bitcoin and what he can do, and also one of the most realistic perspectives that I've come across of the future growth of it. I think one of the reasons, and you can speak for yourself, Giovanni, that he liked what we're doing is that even Giovanni, he's been holding Bitcoin for a long time. But unless you sell it, you really have an inability to make money from it. Now, they're just paper gains, and it's not a bad thing, but you might have to wait 5 to 10 years to get something out of what you're doing. There's nothing wrong with doing that. But what if you want to make money in the present moment? What if you want to make money on a monthly basis because you want to improve your lifestyle, or you want to pay some bills, or that kind of thing? How do we use the volatility that we have in Bitcoin in order to generate cash for us in the present? So, the team that you're looking at right now, we're from Minotaur Trading Systems. We're actually based in Australia, on the east coast of Australia. Most of our clients are from around the world, Europe, the USA mostly. And, we've worked on an algorithm for really the past 2.5 years. And we focus just on Bitcoin. We've got a very good understanding of Bitcoin, but we've got a better understanding of Bitcoin since we've started working with Giovanni. The power law fundamentals have given us a roadmap. It felt like before we kind of could see, a mile in front of us, whereas now we can see 100 miles in front of us. So we don't have a crystal ball, but we do have a good and much better understanding of where we're going. And with that understanding, it allows us to be a lot more precise in our trading, and also to get much better returns. So we already had an algorithm that was working, but the power law just kind of supercharged it and allowed us to also trade a lot safer. That was one of the biggest things. The discovery of the power law support is something that we've been able to use as a framework for our trading. And I'll let Sebastian and Marcus get into that a little bit more. But by having that power law support, it gives us a lot more confidence to firstly trade with, but secondly, to also deploy larger amounts of capital. So a lot of the reasons why most other algorithms or bots aren't very good, because they're black boxes. And with black boxes, you don't get to see the creators and the developers like you do with us. But also, you can't deploy huge amounts of capital into them. You might put 5 grand on a bot, 10 grand maybe, but that's not going to change your life. Where do you go when you want to deploy 6 figures, 7 figures, or more? So Giovanni can talk a little bit now about his experiences, but I know he's already running sort of low to medium 6 figures, and the results he's been getting. And then we can sort of do a bit of a deep dive into the actual system itself with Sebastian and Marcus, and then we can just cover any questions that any of you guys might have. And then if you choose to, peel off and have a conversation with Matt or Josh or book a call for another day, we can do that. So again, it's just a pretty informal conversation to get an idea of if you guys are
Yeah.
interested in what we've been doing together.
So I want to make a few comments. So the first one, yeah, you're right. So I'm very protective of my community, because I went through all kinds of experiences myself. I was, people hacked my account on an exchange. I lost, 35 Bitcoin. So I know how it feels to be dealing with scammers. And so it took me a long time. People were asking me when you're going to tell us, almost like it seemed that I was teasing people when I show my P&L curves. But, and of course, to be to have more data, to be more safe, we will need to test these for much longer time. But, at the same time, there are opportunities that we're going to miss. So I feel quite confident because I know the principles and I saw the consistency of the returns. And basically, the main idea is so many Bitcoiners uh, maybe do or need to use some of their gains, like from this algorithm or other approaches to do things in the practical world. But the general idea for me, what is attracting, is that I multiply my Bitcoin because actually the system allows you to do that. Just anytime you have a USD dollar, a USD gain, you can transform it into Bitcoins. This is what I do. And it's really satisfying to see that amount of Bitcoin going up in a passive way, right? Where you don't do much, and now your Bitcoins are growing without you spending more cash. Of course, you can do that, and you can add it to the system. So it's really that is what is the exciting part for me because in the past 5, 10 years ago, you could have bought Bitcoins at a very, very low price and keep them right now, and you will not have to worry much about anything. Of course, you always want to have more Bitcoins, even if you had hundreds or thousands of them. But the reality of it is that, Bitcoin doesn't, and the power law shows us that, right? If you joined 10 years ago, you could make easily 2 pair within a year, right? That doesn't happen anymore with Bitcoin, right? Because the power law itself says about 42% a year without considering the bubbles. And that volatility that we had before is not there. It's a fact. But you get a trade-off. Or the trade-off is that Bitcoin, it's very solid investment, right? Probably one of the best investment, if not the best investment, not just in terms of the returns, but also the possibility that it devalues, right? It goes because if there is a correction, the correction is usually from a bubble, and then we go to that line that everybody's familiar with the power law. It's the support line that we have never crossed, and there are very real reasons because it's associated with the cost of producing the Bitcoin. So there are not many assets that have all these characteristics, and at the same time, they have enough volatility that if you know what you're doing, you can extract the volatility to actually get more Bitcoin. So that is what is very attractive to me about this particular system. And the other aspect that is very attractive is that, the fundamental ideas of what you need to do to actually achieve these goals in terms of trading, there are usual things that people know, right? And of course, you can push it in one direction and be more efficient, etc. But, it's not that you're coming up with a completely different ideas from almost anybody else. What is really difficult in my experience, because I have developed a trading system myself, automated trading system, and I work with a lot of developer, it's the execution. How precise the execution is, how consistent the execution is, how hands-off execution is, how it can take care of the opportunity at all the different scales. That is unique because and this is where really one system is much better than another. And so far, I have seen almost no problems, at least serious problems, with this system, this particular system. So I was very, very impressed almost immediately by that, right? I sometimes I work on my computer, I hear that little bell from the trading view alert. And then no, I look at the chart. Wow, it really did what almost like if you went backwards and you had that information ahead of time, exactly what you will do if you want to maximize your trades. So I'm very, very impressed by that. And there are a lot of practical problems that you have to face in trading, like execution timing and fees and slippage. And so far, this is one of the best, if not the best, trading system I ever seen. So I can vouch for that. So yeah, these are some of, and now the idea of integrating the power law, it's so natural with this system because all the things that it does go along the power law ideas, of having a support, of having different timing in the market and so on. And so it's a very good, almost perfect fit.
Awesome.
So these are
And yeah, thanks, Shivan. Does anyone have any questions? We'll open it up for a few questions because we don't mind making this as interactive as possible, and then we'll get Marcus and Sebastian to jump in. So if you've got any questions about anything that Giovanni said, please just type it in the chat box. So Giovanni, do you want to give them just a bit of an idea? Most people have probably seen your results, but you're obviously trading with over six figures, and you've made, I think, since we started running it. Do you mind just giving us you don't have to show your screen, just I think everyone will believe you, but what sort of returns you've seen?
Yeah, let me see if I can find one of my recent P&Ls. But meanwhile, you can continue to maybe explain some of the ideas behind, what is the
Yeah.
main approach.
Yeah, so Sebastian and Marcus, you guys want to jump in maybe together and have a bit of chat? Maybe Sebastian
Yeah,
about the
what I'll
broader.
do, I'll let you take over from me, Marcus. And nice to meet everyone. So my name's Sebastian. I'm the Chief Technology Officer and the lead developer of the algorithms. And I'm just going to quickly show everyone some data that we've collected and really how our algorithms perform against industry standards. And then after that, Marcus, I'll let you jump in. And Marcus is also one of our lead developers who works very closely with me on a daily basis. So, he's very intelligent and experienced when it comes to these things. So he's going to have some really good insight for you guys as well. Costa, I just need permission to share.
Uh, I'm just going to make you host. That tends to work.
Okay. Now, everyone, let me know when you can see my screen.
Yep, I can see it there.
Okay, cool. So I'll just quickly run everyone through a few data points, but this is essentially different graphs we've put together based on real data that will perfectly reflect with the curve. So what you have here looks a little bit confusing, but actually if you come to the left-hand side, what you can see is the market average here and Minotaur trading here. And what this essentially is a hexagonal multi-dimensional performance assessment of the industry average versus Minotaur returns. And as we can see, when you talk about risk management, this is simply talking about the units of risk that we take relative to the units of gain. And then as we can see here, we've got the win rate. So the win rate average for us currently is sitting at about 85%. And this is an important note here as well. We've got a 92% market independence, which I will break down for everyone as we go further down. But that essentially means our algorithm's ability to be uncorrelated to what Bitcoin is doing and also what the S&P 500 is doing, which we like to compare against as well. The recovery speed, this is essentially how long it takes to recover from a drawdown. So this isn't a realized loss. This is essentially when the algorithm's in active open positions and in a drawdown. So this is how fast it recovers from that. And also the execution here, which Giovanni was talking about earlier, is our ability to execute trades the way we want them to without execution risk. And as we can see, we've got a very strong 94%, and that, as you can see, the industry average not coming anywhere near that. Very similar to what Giovanni said with his own experiences. Here we have a trade distribution analysis. So it's important to note this data is just based off a $10,000 account. So it's nothing gigantic, but this is just to accumulate data. The beautiful thing about our system, Giovanni and Costa can speak of this as well, is that it has the ability to perfectly scale regardless of the investment size. So whether you're using a few $1,000s or a few $1,000,000, the way that we disperse capital through our risk management and through understanding how to efficiently split our capital into positions means that not only can we handle large amounts of money, but the slippage and the fees are factored into every single trade, which is something, if anyone in here has ever tried to manually trade the cryptocurrency market, you might go to yourself, wow, I've just won a bunch of trades, but I've lost 60% of the profits to fees. Well, this is due to slippage, right? So we've built this into our system so that you're still paying them, you're still copying slippage, but you'll never feel it because it's calculated into your profits. So this is basically data on how that works. Now, this is a really cool graph I want to show everyone, and this basically shows market correlation analysis. So what we're looking at here is the lower the correlation and the lower the correlation point essentially means that we do not follow what the other markets are doing. Now, what this means is that when Bitcoin is slumping or when the S&P 500 is slumping, meaning selling off, during these periods, we are still profiting. And the system has shown time and time again the ability to not only survive mass liquidation chains and mass liquidation events, but very often 9, 10 times out of 10, it's going to profit in those scenarios. So as we can see, we've got some classic industry giants here, like Berkshire Hathaway and ARK Invest, which is a crypto-based hedge fund run by Cathie Wood. And what we're seeing is they're near direct correlation to what Bitcoin is doing. Now, of course, a lot of these funds are buying spot and holding Bitcoin, which Giovanni said earlier is a great strategy. I think we all know you want to buy and hold Bitcoin, but the problem is that when Bitcoin falls, you fall, right? Or what you're holding falls, and you can't really do anything with that capital. And it's exactly the same for the world's biggest fund. So ARK investors at a nearly 0.85. So they're nearly 1-to-1 to Bitcoin, meaning if Bitcoin increases in price, their fund will go up. If it decreases, their fund will go into drawdown relative to their average price. So, we've got a really strong point here that whether Bitcoin is going down, up, or sideways, we're going to be able to generate returns. And as you can see in terms of independent metrics, we've got a 72% lower correlation, and it almost falls into the point of market neutral. Now, with that being said, you can also completely customize this system to be as aggressive or as safe as you want. But of course, to run this system properly, you need to understand, the power law support. And if you're not deploying the power law on this, the wheels will fall off. So it's a perfect kind of unison partnership because it's given us this roadmap to get such safe and consistent returns. Now, I'll finish up here and show you guys one more graph, and then Marcus, I'll let you take over. But this is essentially what we call an RVD. So anyone who's a developer or a trader here would know essentially what this is. And this is essentially it's measuring how much return is generated per unit of risk, right? So high values indicate better risk-adjusted performance. So obviously we've got a very, very high 14.1. What this means is that when the system is tuned correctly, the drawdowns are very, very small and the returns are very high relative to the drawdown. So a lot of systems will give you the ability to profit, but the reason the RVD analysis is so important is because if a system is taking a huge amount of risk to generate profit, then that's a big problem. You need the ability to be able to generate profit without risking massive amounts of your account. This is where the data comes in. Sorry, Marcus, I want to show one more.
Yeah.
What I do want to show is just this here. And this is essentially an equity curve. Now, like I said earlier, this can be completely customized. So we can set the strategy up low risk, medium risk, whatever you want. But this is essentially showing our equity curve, and essentially the red here and the red graphs, guys, is the drawdown relative to the curve over time. As you can see earlier, we mentioned a 14-to-1 RVD, and this is relative here to 147% return over 4 years versus only a 12% drawdown in that time. So you're getting a big big slide in your favor when it comes to risk to reward. But yeah, thanks everyone for listening in on that, and hopefully that all made sense. And if anyone wants me to go deeper on this, I can.
And can you also show them the next setting as well, which is the more standard setting, Sebastian? Because that
The
low risk
medium, yeah,
profile
sure.
is, yeah.
No worries.
And can you see those questions, Marcus, that Bytes Wizard has asked? I'll get you to answer those, yeah. Yeah. So this analysis here, this return, just go over this one, because this is more the out of the box setting that we're using with people.
This would
right
be
now.
more of an aggressive.
Yeah, and Giovanni is running pretty much something like this one. Now, Giovanni, this is what your equity curve is looking like, isn't it?
Yeah, let me show it, and I want to comment.
Yeah.
I'll give you a screen share, Giovanni. Give me 1 second.
Yeah. And maybe Marcus, you just want to cover those questions by Bytes Wizard?
Yeah, I can do that.
You should be able to share now, Giovanni. I've made you the host.
Good. Let me try one thing. Just give me a second.
Do you want me to read them out, Marcus? Can you see them, or just answer the question? Just talk about the answer.
It's all right. I'm replying to.
I'm replying in the chat.
Oh yeah.
Oh, you can, Marcus, just talk. Because
yeah, just talk to respond to the.
Yeah.
Yeah, just
sure. I'll just read one of them out loud here. One I see is by Bytes. Let's see.
Bytes Wizard.
Yeah, by Byte. He says, can we customize the algorithms, or they're just kind of different presets that we can choose depending on my risk appetite and which system, in the system we choose the appropriate algo? To answer that question, you can actually do both. We have tried and true tested presets that have been working, and they work consistently well at a high level. Or if there's something that is more tailored to your individual risk suitability or profile, that can be definitely adjusted to your custom settings. So you can actually do both. All right, the next one and another one here. And how's the P&L calculated? Is it denominated in BTC or USD? You can calculate it in both, or we typically refer as the denominator as USD. It's just easier to follow the numbers that way. All right, let's see. Yeah, that's all we got for right now.
Cool.
Yeah.
So, a few comments related to these things that were discussed. First of all, okay, here, this is my P&L. This is real trades. These are no made up trade, or I'm testing it with a relatively small amount of money. I don't know if that has been described, but the way this works, and then of course the team can improve my description or add or subtract. I'm trying to describe it because I'm part of a team, but also I am a user, right? Because I was skeptical myself, and I joined as a user first, right, to see if this thing was working. The reason why, for example, you see here a relatively flat curve is because I was so, concerned, or let's say cautious, that I was testing it. I don't remember. It was only a few $1,000s, right? And then this is why initially it's flat. So this was really the testing period where I said, okay, I don't see anything really too stupid or going on here. And then actually like the return, and I added more funds. So really, you should start to take these by basically kind of the beginning of September. So since September, I made $34,000. Now, understand this is on top of my Bitcoin, because the way this works is that you use your Bitcoin as a collateral, because it's all traded using futures. So you basically borrow against your Bitcoin that are, everybody else that talks about hodling. we have a Bitcoin sitting somewhere doing nothing besides, of course, going up in value in general. But you don't multiply your own Bitcoin by just keeping them there, sitting and doing nothing. Here, imagine you're getting this money and you're using it to buy Bitcoin, because this is what I'm doing. So it's additional $34,000 in Bitcoin that I actually have on top of my initial Bitcoin. So when we say that it's not correlated in terms of what Bitcoin is doing or the market is doing, but also is not, this is on top of your gains that you get anyway from Bitcoin going up. So this is additional cash that you can actually use to buy Bitcoin. And now, of course, you can actually compound it if you wanted to, like I'm doing right now. You see how it says I reinvested back this $29,000 because I'm buying Bitcoin, and then actually I'm putting it back in the trading system. So I'm trading a larger and larger sum of money. So these things, as you can see, just by looking, is becoming exponential, and is going to be a faster and faster exponential as in actually increase of the amount invested. So I don't know if that actually, because you can convert this into Bitcoin, but understand it's not because a lot of trading system that I saw in the past, they tell you, oh, this system does this, by trading Bitcoin, but then it's actually the total amount, right, including the appreciation of Bitcoin. And it's a little bit cheating because if Bitcoin doubles in a year, and you say, oh, my system is actually doing 70%, it's silly because you actually lost 30%. It would have been better just holding Bitcoin. This is an addition, so you're not selling your Bitcoin at all. You're just using it as a collateral. And it is made in such a way where we take. I really like this idea of making it so safe, where, of course, any trading system has some risk, right? You cannot avoid that, otherwise there will be no gains. But the risks here are so limited because it's all done where the possibility of you being liquidated, given that you are using futures, so you're basically borrowing against your Bitcoin, it's really, really unlikely, because that is one of the places where the power law comes in, where we use basically, it changes, we're trying to do it a little bit more dynamic, but the general idea is that we are using the support of a power law. Right now, for example, right, that value is in the 30s, $35,000. So it's very unlikely that the price goes there, you get liquidity, because that is the biggest risk by trading futures. Because eventually, the idea is that eventually Bitcoin goes up, right? Has been doing this over 16 years. But, locally it can go up or down. But this is what this algorithm is using, is this volatility of Bitcoin, but at the same time, the fact that we have some anchors, right? We have some point of reference, for example, that beautiful support line. So I never saw a so consistent P&L that, it's also realistic, because we are not telling you, oh, you're going to make 10 pair, 100 pair, all. You immediately know that is a scam if people do that. This is consistent, realistic gains that, first of all, pay very quickly. Any fee that the algorithm is, any price that is algorithm is associated with, you can repay them very quickly. And on top of that, basically, I will say the main risk is keeping your Bitcoin on an exchange, because that risk is always there, right? And I don't know, maybe Costa can talk about that, but we are using mostly Bybit, that I think at this point is a pretty solid institution. And of course, you will not do this with all your Bitcoin. You will do it with a portion of your Bitcoin. So that kind of limits the risk. But maybe in the future, there are some plans, right, to actually do something else and
just decentralized
maybe decentralized exchanges and so on. But we are not ready for that. But I will say that, if you are aware of a risk, that, like I say, I think right now the main idea is that if something goes wrong with Bybit, right, that is a relatively limited risk. But people should be aware of that. That is really, because I think of a possibility of being liquidated. I will not ever say it's close to zero, but it's very, very small. And this is what I like, because yes, you can decide, if you want to be more aggressive or less aggressive. But I will suggest everybody, in particular, if you want to test it, to go with a more conservative approach. In fact, this what you're seeing here is a relatively conservative approach. I did ask them to try something a little bit more aggressive in the next few days, but this is my main conservative account, and I'm very happy about it. Now the other aspect, again, to be completely honest, from an investor point of view, is that at least under this setup, there are situations like the one we are experiencing right now, where the bot made some decision, he bought Bitcoin at a given price, and then the price is not moving very much, right? Under such conditions, this setup will not be the best, but the team has also developed other setups where actually it can work even in situations like this, where the price doesn't seem to move much, and maybe Marcus and others can elaborate on that. But yes, these are some of the things that I wanted to comment on how this works.
Yeah, I think Bytes Wizard wanted to see a history of the trade. I think, did you get my message, Sebastian, bringing up a trading view chart so we can just see?
I think he was just asking if he has the ability from his end to view logs, but yeah, I can show what that would look like.
Let's have a quick look at the charts as well. Are you seeing the answers to the questions there, everyone? I don't know if we're messaging to everyone or just talking to
I'm messaging the answers.
Can you see it? Okay, cool.
Everyone see my screen?
Yeah.
Yeah, so this would be a log of the trades entering and executing, as we can see here. We also have other applications to track this through. So TradingView is essentially what we use and where I natively write our code for the algorithms. And we produce trade logs here. So, we have other ways of really accurately tracking the data through third-party applications. We can see return on investment, win rate, all the metrics really clear. But this will look, it's very messy, guys, because there's a lot of trades going on. But this can kind of give you an idea of what the chart will look like while it's trading. So as we can see, there's plenty of action, trades happening all the time. But as Giovanni said, right, I think it's important to understand with any system that it's not perfect, and there's going to be periods where returns are slowed. Now, the beauty of this is doesn't mean you will be losing money or you will be in a position where you're at huge risk. But, I think at the end of the day, and Giovanni will attest to this as well, we are still trading Bitcoin, and Bitcoin is like Mother Nature, right? So we can't always have, or we very rarely have control, if ever, over what is going to happen, for example, whether it's going to rain or if you're going to get a thunderstorm. So, Bitcoin is very similar in the sense that it's still going to do what it does. And, when there's periods of low volatility and low buys, and we're getting very much sideways movement with very little up or down movement, things are going to be slowed. And that's just a natural part of trading, right? And I think what a lot of people want is a system that can trade 24/7 and always make profit and never have any downside risk and never get stuck in trade. But to be honest, you can't have that. So, there's no such thing as perfection, but what we've built is something that can flourish when the market is selling, and there's a lot of selling pressure, can flourish when the market is rising, and will flourish in the sense of protecting your capital and still profit in sideways markets. But it's just important to understand, like Giovanni said, in periods of low volatility, things will be slow. But there's nothing wrong with that, right? It's a psychology at the end of the day. And psychologically, if you give this market the chance to beat you, it will every single time, which is the real beauty in what we're doing. It takes that away. It takes that away from ever needing to worry about that. So hopefully that's clear to everyone.
Yeah, absolutely. Thanks, Sebastian. Marco, did you have anything you wanted to add as a kind of macro perspective on what we're doing and maybe the things that you're uncovering through your work?
Just from a high level from the presentation, there was a slide that I could just speak on really quick to kind of the high level idea behind what we're doing.
Yep. Give me 1 second, Marcus. I'll share my screen and you can read
Yeah,
it.
if you can share it, yeah, I'll read it.
Sure.
It's just one slide.
Yeah, sure.
And it kind of speaks to what we're doing.
Just let me know.
One or two.
Sorry, guys. As you can all see, the Australian internet is not very good.
It never is when you do presentations.
No, it's always when. There we go. Okay.
Yeah, you can just let's go.
I'll go through this for you, Marcus. Are you happy?
Yeah, I can go to this one and then we can go a few slides here.
Yep.
Basically, at a high level, for those that don't know, my name is Marcus Holloman. I am one of the developers of the algorithm, and I run the trading desk where we actually test and execute the strategies and the setups that make the algorithms work at a high level. So I've been in the trading game for a long time, and I used to be a stockbroker. And one of the things that we used to be aware of in the 90s or 99, around the 2000s, was the emergence of electronic trading systems, which were out of reach to retail traders. Only institutions had access to that type of trading. And since then, today, it was more than 50% in 2000, but now it's north of 90%, and it's continuing to dominate everything. Some of the firms like BlackRock and some of the other ones have some very sophisticated algorithms like Aladdin, where they are using this particular algorithms and algorithms like that to basically dominate every electronic exchange on the planet. They're tokenizing everything. So the premise is I came from a world of discretionary trading, and discretionary traders are becoming like dinosaurs now. There's some successful ones, but everything is going to electronic algorithmic trading. So in a world dominated by bots and robots, you better have some that are working for you, or you're not going to be able to compete. It's just getting too hard. So that was kind of the backstory that drives our dedication to making the algorithm what it is. Just making an algorithm that runs 24/7, 7 days a week. It doesn't sleep, it doesn't eat, it doesn't get tired. It executes flawlessly for the most part, and it gives us a chance to sort of level the playing field and compete with other algorithms that are on the other side. So if you would, Sebastian, just okay. So these are some of the minds that are behind this type of weaponry, if you want to call it. One of the king of the quants, Jim Simons, is known as like the godfather of algorithmic trading. He kind of infused mathematics with the programs, and he did it in a way that kind of went outside of traditional finance. He focused on bringing scientists and physicists that had very little trading knowledge and leveraged their creativity in their respective fields to develop. And he brought that to the financial markets, and he created an algorithm that even to this day, there's very little insight on actually the coding behind it. However, it has produced more than 66% a year for decades, and at very high levels of capital. So he's like the godfather. The current king of the hill right now is Larry Fink and his Aladdin, and BlackRock is basically swallowing up the entire world. As we speak, they own over 5% beneficial ownership in every company in the S&P 500. To date, they control financial lobbying, on a world stage, politicians, they're eating up not only the bond market, the currency market, commodities. They're even getting into non-electronic exchange assets like real estate, and it's all driven by algorithms like what we use. And then the other gentleman on the last on the right is Ken Griffin, who's one of the biggest market makers in the world with Citadel, and they run on all the algorithms also. So the point that we're trying to make here is algorithms are the thing. They have been a thing for a long time, but now they are in the reach of everyday traders such as yourself and us. So I think that's it. Let me see the next slide. It might be all I need to. Oh yeah, one last slide. This is a little bit high level of what is under the hood of our accumulator algorithm. What we wanted to do with the algorithm is do something that is basically tried and true and proven and really can't be changed. And we just want to execute it flawlessly. So something extremely simple, but it's just flawlessly executed. So it's based on the principles of DCA, and anybody who does anything with large amounts of capital, from Warren Buffett to any hedge fund manager, is going to understand and agree with the principles of DCA. It's buying really good assets when they get on sale or when they pull back or buy the dip. And then we also use principles that go way back to Wyckoff theory, where we're buying accumulation, markup, markdown type of action, price action, which is just, once again, it's unrefutable. It's been in the markets since they existed hundreds of years ago. And then we use mean reversion. The real secret sauce is the mean reversion, where you take a very solid asset such as Bitcoin, it goes up over time, and then you just play the cycles on that uptrend. It's very simple. And when it gets out of when the price is extrapolated or extended, it tends to revert back to that mean, and it continues to go upward over time. So those are the principles that are underneath the hood. Very simple. We just execute it flawlessly, and the algorithm does that. So that's it. That's all I have for
Thanks,
now.
Marcus. That was awesome.
Thanks, Marcus.
Yep.
Great. So we're kind of closing in on the hour. I guess, did anyone else, let's just throw it out to the questions. You know, there's a few of you still here. So do any of you guys have questions you wanted to ask of any of us? If not, what I can do is send you a link to book a call with Josh and Matt, and I'll give them 2 minutes each to just introduce themselves. They can talk to you directly. If you do speak to them, just let them know that you're part of the Power Law webinar, and they'll put in a little coupon code to give you a bit of a discount for joining today. But yeah, if you've got any questions, now's the times to speak. Otherwise, did you want to add anything, Giovanni, before I just let Josh and Matt introduce themselves?
No, mainly that, you know, there are no guarantees, of course, in trading, but you know, having both the perspective of being a user and also part of a development team really changed my way of seeing this, because, you know, many times when you create something, you don't have a user experience, right? Or at least you don't see things from that point of view. So I have been a user before, and it really took me a relatively short amount of time to be convinced that there is something really valid here, because you know, I had an extensive experience also as a creator, and I'm very surprised by how robust the system is, and how, because many times, you know, people offer you sophisticated things like, oh, advanced AI, this and this other, and right now, to be honest, there is no an AI system that can really handle consistently the market. This is much better, I think, because it's based on simple ideas that can be tested and verified. But the execution is really where it comes, you know, where it goes. Because if you don't have that, it doesn't matter how sophisticated and amazing your ideas is, you have nothing. And so I'm very impressed by the execution component, and how we put together relatively simple ideas, but, you know, putting it where this is where genius is, right? The power law is also a simple idea, but if you understand the relevance and how to use it, then this is where it is superior to so many other things, because it is simple, it's direct and powerful, you know. So this is my main comment about all this. And in general, if of course I'm lucky because I'm working with the team, so I didn't have to pay for the the initial fees of acquiring the system, but I also try to see things from that perspective, because I would not have recommended if I didn't think there was value. I think you can get, the ROI is actually pretty, it's going to be a relatively short amount of time when you're getting back wherever you invested in it. So these things will pay itself very quickly and many times over. I'm pretty convinced about this statement. If people have worries about that. Yeah, this is what
Fantastic.
I have to say.
Thanks, Chair. So I'm not sure. I'm not sure if we're all talking to ourselves, because it says I'm sending a message to hosts and panelists. But can all the attendees see the link to book a call? Just type a yes in the chat box if you can see that link. Maybe keep it. Yeah, no, I didn't think so. We're kind of sending message. Can anyone send a message to everyone? Like Matt, can you send a message to everyone in the webinar chat? Or Josh? And if anyone's got any questions, now's the time to type. You should be able to, Josh and Matt. Let me just send you this, Josh, because you can do it.
Looks like
Yeah, I can see that we can only communicate
Yeah.
between hosts and panelists.
Josh, that link's for both yourself and Matt. Do you just want to post that in the general chat? And Matt, do you just want to quickly introduce yourself and Josh as well?
Yeah, sure. So my name's Matt, as Costas just said. I've been working alongside Minotaur now for around 2.5 years. Investments-wise, my background, I was always in the real estate industry and invested in gold quite heavily as well, to the point where I quite like keeping gold bullion in my little safe because I just like the shiny coins, to be quite honest. But what I really noticed and what I really loved about moving forward is I had a previous business running, and I utilized AI to really automate a lot of the processes that were involved in what I was doing. So I run a health and fitness business. I was a biomechanics specialist. So everything that I did was based around the numbers and forcing movement in the correct patterns. And this system very much appealed to me because of that, because it is based on math, it is based on calculations, it is based on measurable quantitative measures as opposed to guesswork. Because the moment things start being guesswork, it just becomes a game of roulette. You're gambling. But when you're not gambling and you're trading smartly, you have the correct way to invest. And that's why I love this place. And it's always been great. And I love getting to talk to people from all around the world. I'm based in England, if you can't tell from the accent. But yeah, I'm usually speaking to people from Europe or the vast majority of the US, but always happy to chat with you guys.
Awesome. Thanks, Matt. And Josh?
Awesome, Matt. Thank you.
No, you think I'm
Josh,
muted,
you're on
Josh?
mute.
There we are. Yeah, so I've been with Minotaur now for the last around 2 years now. And I came from a background of failing with crypto, really, just buying coins, just kind of trying to catch the hype and trying to kind of, well, I didn't know what I didn't know, right? So I didn't have a system, I didn't have a vehicle. So for me, you know, running Minotaur, it's been a case of having something that's been really consistent over time. It's basically that vehicle that wasn't me, right? Like, you know, it's basically doing what would take me as someone with a medium level IQ years and years to kind of get myself. So, you know, it's pretty damn impressed with that. But my background's really been in healthcare and PPE and I live between Dubai and Thailand. So I do a bit of brokering, a little bit of brokering. But for me, really, this has been a system that's allowed me to kind of get involved in trading without having to actually spend the time, having to acquire all the skills or the knowledge and all the time to actually get there. So, you know, more than happy to jump on a call with anyone. And the calls will just be really, you know, matter of fact. They'll be really open and honest. It'll just be me finding out a bit more about yourself, where you're at, where you're looking to go. And then once we figure out a gap there, we can just look at that. And then we can look at how the system can potentially take you to where you actually want to go. So it's as simple as that, really.
Thanks, Josh.
Thanks, Josh. Anna just asked a question in the Q&A, which is probably the best place to ask the questions, actually. So this actually is plug and play. Actually, I'll get Sebastian to cover this. The question is, Sebastian,
I can't say
sounds
the
like
question.
this is, that's all right, I'll read it out. This is not, it doesn't sound like it's pluggable to a US approved exchange without, legally questionable ways. Do you have a timeline for a deck setup? And well,
Yeah,
firstly, let's
so
talk about how we can run this on Kraken and CoinSpot and how that works on those exchanges, how we can also move into other exchanges international, and then the DEX, cover all three.
yeah, sure. So we can plug and play into any spot-based exchange. And to be honest, definitely, the system flourishes when you have the ability to hold Bitcoin as collateral. But, for a lot of people, they are in a situation where regulation only will allow them to trade on spot exchanges. And for anyone that is in that position, I strongly encourage you to still use spot exchanges, because it's, the returns may be potentially muted, but the reality is there's absolutely zero liquidation risk when you're not trading futures either. So, the spot market is actually a very, very powerful thing, and the algorithms will work identical on the spot market. The only difference is you're not going to be borrowing assets and leveraging. So, I highly encourage anyone in an area where you have to use spot to still use it, because the reality is you're still going to get the same principles happening with no liquidation risk. Now, if you're in a position where you want to use futures exchanges and you're not sure how, this is something we can absolutely consult you on. And there are actual legal ways to do this as well without jumping through red tape. And this is something Josh and Matt and us as a team can also consult you on how to do in regards to the DEX, because that's a really good question. So we are building a software at the moment, and we've been building it for the last year or so, I would say, and we're getting very close to finalizing development. And we have great relationships with exchanges. So something that is coming potentially in around Q3 is that we are going to be doing an integration with Hyperliquid. So for anyone that's in the DEX space, you probably know what Hyperliquid is. If you don't know what Hyperliquid is, I'd strongly recommend looking it up. But it's basically, in terms of safety and liquidity, one of the best DEXs I've ever seen. Their code is quite amazing. It's all visible online and fully audited. And, they kind of came out and they've already rocketed into the top 20 on CoinMarketCap. So there's a lot of hype behind it. Really good exchange. And we are going to be completely integrating into Hyperliquid. And you will be able to use our system fully fledged end to end on DeFi markets. And you will be able to do it this year as well. I don't have a hard date, but I'm going to say roughly Q3. But yes, we will have a solution for that. And that's obviously very exciting, because that opens up a world of possibilities, as you all know, once we can do this on DeFi.
Absolutely. So yeah, there's a lot to look forward to. The way we structure our fees is usually we have an upfront licensing fee, and then later on, when we launch our software, there'll be a subscription element as well. But if you want all those details, just book a call with Matt and Josh, and they'll go through everything with you. So we've hit the sort of 1 hour mark. I think everyone's sort of covered what they wanted to cover. Unless you've got any other questions from the attendees, hopefully you can see the book a call link. If you don't, maybe post in the Discord group, and Giovanni can send you something. I'm in the Discord group anyway. I'll see if there's anyone saying, "Can I have the link?" And I'll make a post as well. Or I'll share it with Giovanni to post. Yeah, Ben, where's the link? Josh, can you post the link in that webinar chat? Because he should be able to see it if you do it.
Sure.
Do you want to? Yeah, that's all right. We'll post it now. Josh, just post it in the general chat that everyone's typing on. Sebastian, the question, did you say you had a Kraken perpetual futures integration?
So Kraken actually does allow futures trading, but it's discretionary based on having large amounts of funds. So it's usually reserved for institutional investors. So yeah, we can, but it's very rare to see a retail trader get accepted for Kraken futures. But we can do Kraken spot, and we can do Coinbase spot. And obviously, guys, we have a pro crypto regulation coming in for the first time ever. So, I think we're going to see some really good changes coming forward. And I think the doors and the floodgates are going to be opened under this administration, regardless of where you sit politically. For cryptocurrency, it's a good thing. And, I think futures is inevitable at this point for US based citizens. So yeah, the answer is spot for Kraken and futures for institutional traders inside America.
Awesome. Ben and Tristan, can you see that because I know all of us are panelists, we can't seem to send an everyone message. Zoom's a bit confusing. Can you see in the Q&A box that I've answered Anna's question and I posted the link there? Can you just let us know, Ben or Tristan, if you can actually see the link now? Yep, cool. All right, so if anyone needs the link, it's in the Q&A section. I think, yeah, Josh, you wouldn't be able to do it either because you're a host.
Yeah, it wouldn't let me. I was trying, yeah.
Yeah, cool. All right, so that pretty much covers it. I guess this was just a really soft kind of, not even a launch. We just wanted to get together, have a conversation, and just invite some of Giovanni's community in very short notice, so we didn't get too overwhelmed. So I actually think it's been really good. Hopefully, Matt and Josh can speak to a couple of you guys and give us some feedback as well. Giovanni, I guess, yeah, we'll continue the conversation in Discord if people are more interested and have more questions.
Absolutely.
Fantastic. All right.
Fantastic. Thanks, Giovanni, so much for your time. Thank you, Costa.
No worries. Thank you, guys. We'll stay in touch in the ways we do on Slack. And everyone else, thank you for joining the webinar. You'll be hearing, hopefully, a lot more about us in the year to come.
Thanks, everyone.
Fantastic.
All right. Have a good
you,
night,
everybody. Bye.
Thanks, everyone. Bye-bye.